Hey, Laughing Skull Dude. Yeah, who knows? They're also announcing a partnership in the U.S. finances for launching their U.S.-based exchange. Full KYC, blah 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 blah, plus only majors. So basically, a copy of Binance Jersey, which we all know does spectacularly well with all the money they throw behind it in marketing. Hey guys, hey Bjorn. I think we'll get started here in about 2 minutes, maybe more or less. So not only that, guys, but in the U.S. U.S. exchanges are going to be coming through a lot of different hardships in the coming months when the CFTC finally classifies Bitcoin as a future, and then you need a CFTC license, and you have to apply for it. It takes 18 months to receive it. In that interim, will they be allowed to operate? Will they not be allowed to operate? How are they going to handle deposits? Will people have to be limited to trading certain amounts of assets? Will there be? There's a lot of things coming down the pipe that are going to cause business in the U.S. to get much worse before it gets better in terms of crypto. That's for sure. News on funding. Hey, Bjorn. No direct news yet. Still digging in. We have a few more prospects now, and a few different ways to approach prospects, but no news yet. No glamorous news yet. Let's put it that way. Thanks, Bendik. Appreciate it. Yep. Thank you, Fergus. Big thanks to the entire team. Obviously, lots of effort went into that from all shapes and sizes, from all sides of the business, actually, from support to marketing to finance to obviously development. Lots of different hands in that cookie jar to make sure that it worked well in the end. Situation in the U.S. Well, look, when it comes to tradability of assets, you don't need to be licensed unless you're based in the U.S., except for a few specific states. New York is obviously one of them. We haven't yet applied for a BIT license, so there's no ETA yet on New York. To be honest, I think that once the CFTC does their classification, it's going to override the BIT license anyway. So we'll have to see how that takes shape. I think the BIT license is a nice litmus test, because if you get a BIT license, you're at least you're showing the regulator that you're doing everything you're supposed to be doing. It doesn't necessarily mean you're doing it, but it's a good litmus test to understand if you have all the policies and procedures in place that are required to operate a regulated financial business on the blockchain, basically. Well, Binance isn't going to do anything, guys. They're partnering with someone who's already done it. Binance is just going to give them a white label, and they're going to share fees. But this company they're giving a white label to is just FINRA registered, which is nothing. Anybody can do that. It's very easy, actually. So Binance probably won't offer us to New York residents or Hawaii or I believe Idaho or whatever other state that's on the list that you need specific licensing for. Again, the lazy route around. It's not fully compliant. It's compliant on the lowest rung of compliance because there's no other specific requirements except for a few states. All right, guys, I'm going to jump into our normal show, and then I'll get back and answer these questions once we get in the AMA portion. So give me 1 second here. Just got some cool news from Dev, so I'll let everybody know about that a little bit later in the show as well. So I'm going to start off. So we have an agenda here. I'm Kevin Murcko, CEO here at CoinMetro, in case you weren't aware of that. If you weren't aware of that, bro, lay down the marijuana. But anyway, I am Kevin Murcko. We have a little agenda we usually like to follow. Market news, 10 pieces of market news. I try to focus 1 minute on each, just a little comment on the topic itself. You don't want to listen, come back in 10 minutes. Then we do Kevin Explains Crypto, 30 seconds, 1 minute. I usually have a phrase or a word every week that gets chosen at random, and I explain what it is in layman's terms, best as I can. Then we do a live Q&A, and that includes, obviously, questions from YouTube. And then, if time permitting, I go over questions that rolled in over Reddit. This week looks like we had 8 people post questions. There's about 12, 13 questions there. We'll probably be able to get to all of them. We'll see what happens. So let's start with market news. We have 10 pieces of market news. We'll start with number 1. I think that's a good place to start. So 1 of 10, cryptocurrency wallet GateHub hacked, nearly 10 million worth of Ripple stolen. Yep, saw this in the news. I already commented about this on Blocks Live, actually. Yep, they were hacked. So it just goes to show, again, guys, that the majority of hacks are all about protocol. I was just talking about the BIT license. I don't think any company that actually holds a BIT license has been significantly hacked since getting the BIT license. Somebody check on that for me, fact check that, but I'm pretty sure that's the case. And the reason is that license is actually pretty onerous on protocols. So it just goes to show that you need to follow protocols. No matter how of a pain in the ass those protocols are to follow, they should be followed every time. I have seen that a few exchanges, or one exchange in particular, has caught a bit of that XRP and is planning to return that to GitHub, so that's great. What we need to do as a community, guys, is we need to have communication between exchanges. We need to have some type of, I hate to say it, centralized database of bad actors that immediately gets updated when there's a hack, so every other exchange can take action. Until we do that, these things are going to continue to happen. People will continue to lose money. It is 100% possible to stop 100% of hacked money leaving the ecosystem with the help of the regulator and with the help of communication between exchanges and on and off ramps. It is definitely possible. It's not easy, but it's possible. Number 2 on the list of 10, Bitcoin's Lightning Network capacity drops 13%, causing concern. Well, I think people are starting to realize that Lightning isn't all it's cracked up to be. It sounds great. It's a way to send Bitcoin transactions near instantaneously. Great. I can make payments now for my Starbucks coffee. All is right with the world, and I can sleep better at night. The thing is, though, is that Lightning Network depends on a credit on the Lightning Network, which means it's limited in capacity to the amount of credit that's available on the Lightning Network. And then you have this other piece, which maybe how things get verified. And so you have to have actors to be doing this verification. There's a lot of pieces of Lightning Network that are very limited right now, and I think people are starting to realize that limitation, mainly because it's getting a lot of coverage. But I don't think the amount of coverage it's getting and the amount of new users it's getting is actually equating to more credit. And they're probably running into issues. So we'll see how Lightning advances over time. I think it's a great idea on paper. I think because of the inherent limitations of Bitcoin lead to inherent limitations of anything built on top of it. So Lightning Network's a great idea, but it's still flawed. It's a technical flaw. So I think someday, one day in the near future, hopefully it gets solved, at least solved to a better extent than what's solved now. Number 3 on the list of 10, G20 confirms it will apply expected tough new FATF rules on crypto. They're not that tough, guys. Everybody gets their panties in a ruffle about this nonsense. And to be honest, if you're already compliant and you're already doing blockchain analysis, how hard is it then to share it with another exchange if you transfer money for a client on their behalf to another exchange? Not that difficult, my friend, at all, actually. So the reason why people are getting all ruffled up about this is, one, the privacy concern, guys that want to be anonymous all over the place. But you know what? Those guys, the days are numbered for those guys anyway. I hate to say it, but they're numbered. I said it a year and a half ago, and everybody thought it was a joke. Like, we're decentralized, and I'm 25 with a man bun and tattoos, and we're going to make this awesome. Unfortunately, though, they live in a world run by 65-year-old bald white guys, and 65-year-old bald white guys don't generally understand or like what 20-year-old man bun wearing tattooed white guys have to say. So this was going to happen regardless. The fact that just finally actually putting this on paper, the travel rule is not that hard to comply with. What it will do, however, it's going to stifle a lot of different businesses that tried to go this full anonymous route. And it's going to make it much more difficult for them to operate. People will say, well, it's going to drive everything to a black market. That's fucking ridiculous. There's black markets in every market. There's a black market for T-bone steaks somewhere in the world, right? But you don't really hear about it because who cares, right? There's a black market for, Beanie Babies online somewhere, guaranteed. But, who cares, right? So there's black markets for everything. But the black market will never exceed the white market if the markets are run correctly, especially if government can control on and off ramps of those currencies and monitor them. Whether they're anonymous or not, they can still be monitored. Remember that. Number 4 on the list of 10, Coinbase expands cryptocurrency Visa debit cards across Europe. Yeah, well, they already said they were going to do it. So they're making I think another 8 or 9 countries. Good on Coinbase. They're using PaySafe, who owns Skrill and NetTeller, to do their debit card program. Pretty solid companies, have had a few issues in the past with limitations on their own cards. So we'll have to see how that plays into with Coinbase. But look, guys, I said this already last time. We're going to do cards as well. Cards, though, are a baby step, a Band-Aid to actually, look, cards are from 1955. Right? Barclays launched the first credit card, I believe, 1955 or 1956. This is old technology, right? But it's a stepping stone. It gets you into some more hands, people that don't understand crypto. Eventually, though, it's all about NFC. It's all about card pay. It's all about wallet payments. It's all about payments from your cell phone. It's about being able to, scan your eyeball or your fingerprint somewhere and make a payment without even having your phone with you. That's what it's about. That's where it needs to be headed. But like everybody else, get to the hands of as many people as possible. Debit card helps you do that. A draft bill in India proposed, number 5. Draft bill in India proposed 10-year-old ban for all users dealing in crypto in India. RBI says it's not aware of such a ban. And there's a request. Can discuss effect of blanket bans? 3 million BTC in circulation in India. If India bans, what will be the global effect? So India probably will try a ban, right? Look, China banned retail FX years ago. You know what happened? It curtails the business, that's for sure. But anybody who really still wants to trade FX, you know what they did? They just went offshore. That's it. They didn't go to a black market. They just went into a market that was less restrictive that would accept them, right? Same thing happened with Japan until Japan regulated. Same thing happened with Australia. This is just how markets work. But a blanket ban will never work. It never works for anything. Prohibition doesn't work, guys. When we tried prohibition in alcohol, lots of people died. People still drank. We've tried prohibition in drugs across most every country of the world for the last 30 or 40 years. People still do drugs in way higher numbers than they ever did before and die from drugs. And, we got prisons full of people that sold, a little bit of drugs to their buddy. It's ridiculous. It never works, though it does give a lot of money to a lot of private companies. So that's why they keep trying it. Here in this aspect, I think they may attempt to ban. It'll backfire. Backfiring not meaning they're going to have this huge black market. But they just won't be able to stop it. Indians will simply go outside the country to buy and sell their Bitcoin, and then it's harder for the tax authority and the government not to track it, but to actually put their foot down and stop it. It becomes impossible at that point, and they'll realize that, and then they'll ease off the ban and provide some way to monetize it. I don't think it has a huge impact. What it will do, however, is restrict liquidity for a good amount of time. A good amount of time, could be weeks, could be days, could be a couple months, where all that volume that sits in India will basically need to find ways to get out of India. And that may take a bit of time. So that could cause a bit of volume issues, but with all the fake volume that's around crypto, we probably won't even notice it. Number 6 on the list of 10, Coinbase's crypto debit card kicks off with a rocky launch. Well, rocky launches on tech products. I know nothing about that. Let's go on to the next number. Number 7, John McAfee launches Magic Crypto Trading multi-platform and debit card. I saw the website. It looks like, my 7-year-old daughter, 8-year-old now daughter, designed it with an eye patch on after she drank a bottle of whiskey and had her computer backwards so she couldn't see the screen, which kind of makes me wonder if he actually is involved in this or it's some type of scam. I don't know. Or he's just shilling something and allowed them to use his name because they gave him a bunch of money, which definitely could probably be something. I think reading what they're planning to do behind it is a bit interesting. At the end of the day, though, look, John McAfee, it's like if you want to do something that kind of curtails a bit regulation, and if our friend Roger Ver's listen to this, he should listen to with his local or Bitcoin.com nonsense. If you're trying to do something that goes specifically against regulation, don't do it publicly. Like, don't be launching it on Twitter. Especially somebody like John McAfee, who obviously is already in the eye of I don't know how many different law enforcement agencies. So I expect this to have a very short future. We'll see what happens. But website looks like shit. That's my last word on that one. Number 8 on the list of 10, underwriter claims crypto custodian BitGo exaggerated insurance coverage. Actually, I want to read this one. For those of you who are visiting for the first time here, I usually don't read these things. It might sound crazy, but usually I've heard about the story before, or I've read a story similar. So. But when it's something that I haven't heard, and I actually didn't hear about this one, so I'm going to read this real quick or skim it. So BitGo's best policy absolutely does not provide coverage for remote third-party hacks. Coverage only provides some storage media in secure storage. In other words, there is no coverage for any lost sensitive information resulting from the generation, transmission, or private key lifecycle. Coverage limited to hacks of offline private keys. Okay, so maybe this was a verbiage issue. I don't know. I personally knew that BitGo's coverage only covered cold wallets because I actually had this discussion with Lloyd's of London some time ago, maybe earlier this year. The fact that they don't, when they insure things, let's say like artwork, for example, they don't insure the artwork because to them the artwork could be worth 10 cents. It's about where you put the artwork. If the artwork is in your studio apartment in Compton, California, with the door open with no lock, then that insurance is going to be quite expensive. But if you put that same artwork in a bank vault, shielded by 45 guards with laser guns from the future, that insurance coverage is going to be much, much less. So basically what they do is they analyze the hardware where the cold wallets are stolen. If that hardware is behind any type of security, what type of security is, and that's how they base the insurance. So I already knew this. Maybe their PR guys need to go back and change some verbiage around how they release their PR statement. I don't know, but not news to me. Might have been news to somebody else. I don't know. Point is that never sign up for a service based on a PR announcement. Read the terms and conditions. Number 9 on the list of 10. Polish cryptocurrency exchange CoinRoom shuts down overnight, taking funds with it. Well, for the amount of crypto exchanges that exist, there's actually not that much fraud going on. That's all I have to say about that. If you look at the fraud that happens between banks and regulated financial institutions and unregulated financial institutions, it's pretty massive. I would say in crypto, we're probably at or below the average rate of fraud when it comes to somebody just running off with money than almost every other non-regulated, and probably any other non-regulated industry in the world, because you don't hear many of these. You've heard a few in the news here or there, but this happens very infrequently. What it tells you is regulation helps here. It helps because it's a deterrent, because if the regulator knows who runs the exchange, has their name, their passports, everything on file, knows where they live, does spec sites on their office, it becomes much more difficult for the guys to just run away, because they know it's substantially more for the government to find them and put them in jail. So that's why you should be at least a little bit pro U.S. trader. They actually banned IP addresses first, which probably banned more Chinese people, to be honest, than U.S. guys, or anybody trying to steal Netflix from the U.S. Outside of that, though, so did this. It's actually, they probably should have done more. They probably got a strong letter in the mail from some 3-4 letter agent and decided to do that. Now they've gone to, or maybe I'm wrong with the dates, a complete ban of U.S. individuals. And the announcement right around the same time that they're part of. I think it's, let's see, a second. Actually, doesn't even mention it in this article. I don't see it. So the point is that, Binance does all those altcoins, and you pull out the fact that most people have been trading there anonymously, their volume goes to. And you can see that by looking at Binance Uganda and Binance Jersey, who do significantly less volume, even though they pump significant amounts of money into marketing for both those firms. I would expect the same thing to happen for the more highly regulated than Binance. It's not Binance. Let's put Binance is not opening in the U.S. There's a company in the U.S. that's licensed by the way, that's a registration PR mistake that we spot here in the U.S. that allows them to do business in probably 47 of the 50 states. So they'll go ahead and do that. Binance is providing a white label platform that allowing them to use their name. It's basically a licensing and a white label. Binance wants to have a part of the U.S. There's already a couple files around the around those 3-letter industries. Agencies. So when it happens that the CFTC does their classification, that's going to require 25 million net capital plus, which Binance could probably cover, but maybe not this BAM. Outside of that, 18 months license. So we're going to have to see how that works out. Anyway, it's PR. It's in the U.S. with a registration with FINRA that's going to use Binance's technology and like their name. That's it. All right. So we got through those 10 little news things. I think the 10 minutes this week. Sorry about that, guys. I didn't even know when we started. I think it actually took roughly 13 or 14 minutes. So a little bit out of whack here, but Kevin explains crypto rules. Most people know what a faucet is. You go in your kitchen, you turn it on, water comes out. In terms of crypto, a faucet, you can win a random amount of crypto. The first faucets were all could win, some dust, some Satoshis, or you get some random jackpot where you win, 1 Bitcoin, 2 Bitcoin, 10 Bitcoin, 100, depending on Bitcoin price, obviously. Guys make money. Why would they do that? To maybe 30 to 40, maybe even high percentage up to the faucet is. To our live Q&A session, get on. Let's see. But it depends on how strict their KYC policy is, because if a guy, VPN from China guys, or Australia, or London, or whatever, they get a VPN. If they're only checking IP addresses, well, U.S. people will still trade. If they're actually checking IDs and they're actually doing it and not just having some nonsense software analyze, face with ID and somebody can use a fake ID. Either way, though, it's going to affect their volumes. That's for sure. U.S. is obviously accounts for a significant piece. I would say upwards of 30% of Binance's volume. I actually had a number someplace from an internal study. I think it was 33%, to be honest. I don't remember the exact number, but it was upwards of 30, 35-ish was suspected to be coming from U.S. individuals. From Throwaway, hi Kevin, congrats on the recent milestones. How many new signups are you getting per day on average? Actually, don't know, to be honest. I haven't checked in the last little bit. Me on Telegram, and I'll get it before the end of the day and let you guys know. Hi Kevin, congrats on Vendrick. How now that margin trading is live, what's the next online high priority list? So we had a bit of discussion today. We have I just told you I got some dev news. We're pushing XCM live on margin at 5 p.m. It's Talon time, so get ready for that. That's in an hour and a half, guys. A little over an hour and a half. You'll be able to trade XCM on a margin platform, 3-to-1 leverage. How do we do this? And within a liquid asset? Well, we have a bit of tricks up our sleeve on how to maintain price with a bit of price discovery. So yes, XCM margin will be coming live. What we're focusing on is, so the TAM is getting a bit of a workaround, basically because of regulatory reasons. We're gonna change a bit how it functions. We're looking at that as our next major release. Margin lending, which won't be called margin lending for regulatory reasons. Margin posting or the margin marketplace will be coming online hopefully within the next weeks. As we work on this TAM modeling, which will take 6 to 8 weeks, we will be in tandem working on this margin posting margin platform, so people will be able to post margin and earn a fee from posting that margin. Those are the next two immediate things. The API is also in the mix. I think Bjorn asked about that, and I said I would talk about it on the AMA. I don't have an exact answer to it yet because we're still trying to fine tune the schedule, but it's included in there, so it's something we'll be working on as well. Bjorn, how worried about you a potential recession? How it would affect CoinMetro? Never worried about recessions, guys. Worldwide, you know, there has only been 1 or 2 worldwide recessions. But even in worldwide recessions, most people that have some type of discretionary income, which are those that usually gamble or trade, still have discretionary income. In fact, sometimes they have even more. So recessions, when it comes, I've been through several recessions when I was managing FXPIG, let's say US recessions, European recession, etc. It never really affected our volumes. Overall, it affects, let's say, the entire market per se. Mainly because the assets can become more volatile, et cetera, in recessions. However, that can also add in more volume. And in recessions, people still need to sell. And there's always going to be buyers, guys, because if people are selling, there's always somebody on the other side buying. So recessions don't really affect gambling, trading, vices. They don't, and most people that trade and gamble, it's a vice for them. They don't do it as a hobby. They don't do it because, every Saturday I go to they do it because it's a vice. And vices, whether you're an alcoholic, a drug addict, I don't know, you like to go to whorehouses or you like to trade, even if you're in a recession, you still go to whorehouses, drink, and trade. It does not affect those attributes because they are vice. It's a vice. It's something that you get addicted to, unfortunately. So it doesn't really affect all that much, to be honest. Okay, some guy posting a advertisement here. Gonna get rid of that one. Kevin, how do you make sure your employees actually follow set protocols all the time? Well, we build in a lot of those protocols into our interfaces, our admin interfaces, meaning that they're forced to, because they can't like go from step one to step 6 without doing step 2, 3, 4, 5. And then on that, obviously, there's spot checks that happen. Every department has supervisors. Those supervisors are there to also check to make sure different protocols are followed. We also limit the amount of people that have access to certain information in certain accounts. And most of the people that have access to most of the accounts don't even sit on the same continent. And because there's multi-signature involved and other things and timestamp multi-signature, et cetera, it becomes very, very difficult impossible for any single person to disrupt the system. It would have to be multiple people in multiple parts of the world in multiple time zones, all coming together within a very short window in order to have any real effect on most of the more, let's say, fragile underlying systems like cold wallets, for example. Bjorn, a lot of news about Deutsche Bank lately. Do you think they will survive or eventually go bankrupt? I think, yes, if they'll get bailed out. I think, generally speaking, well, before the bailouts, people didn't like banks. I think if you were to ask 10 people on the street in 1995, do you like banks? They would say no. if you ask them in the 80s, they'd say no. If you ask them in the 2000s, they'd say no. After the bailouts, they'd probably say, no with a nice exclamation point after it, or maybe a rosy little word before the word no. I don't know. So banks have never been something that people like. That's for sure. People always dislike banks. So I think that bailout is probably not going to happen. The problem is, though, is that when that term "too big to fail" is bullshit. That's for sure. Nothing's too big to fail. But if you look at it, Lehman Brothers, for example, who failed miserably, held a lot more capital than your average retail bank that was bailed out. The reason why they didn't bail out Lehman Brothers is because they, as an investment bank, they assume everybody that has their money in there is a accredited investor, someone that knew the risks, right? Because obviously someone with more money understands risk more than someone with less money, because that obviously makes a ton of sense, right? So they're allowed to fail. That doesn't even make that. It's almost like an oxymoron in itself. They're allowed to fail because they didn't have retail money. So why do they put so much onerous behind protecting retail money? Why is it that government supposedly wants to protect people that they think can't protect themselves when it comes to their own money? Well, one of the big reasons is votes, right? If a retail bank has 100 billion in their coffers and an investment bank has 100 billion, who do you think has more clients? Who do you think has more voters? You think there's only 10 guys with 100 billion in a retail bank? No way. It's probably 200 billion people with 50 cents in their account each, rather than the investment bank, which may only have 70 institutional accounts. So that's one of the key reasons. So I think, to be honest, they need to figure out a way, politicians do, in order to try to save people from the disaster of losing their money in a retail blowout of a bank. If they can do that, they won't bail them out. I think bailouts right now would almost have as much political negativity as they would positivity because of what happened in the past. So I think they could go bankrupt for sure, but I think they've been readily trying to change their business model to get to freshen up, to lose some of the baggage that they have. It might be too late though, especially with all the scandals surrounding Deutsche. So I think there's a high probability that the bank could fail, for sure. The question is, what does the German government do? Right? I don't think they bail out, but we'll see. What do you think of the Google integration of Chainlink? I read this thing, but I don't remember reading that Google was actually using Chainlink. I remember them talking specifically about Ethereum. Somebody correct me if I'm wrong, and then send me a link and I'll have a look. Won't be able to use passwordless voice login from. Actually, we just signed a contract with a company here in Estonia who we worked with in the past to provide this passwordless login. Salvatore, our CTO, Salvatore, got the information from them. It's not super priority, but we're going to try to work it in. So I'll see what it looks like on the schedule. I'm probably thinking end of July, early August. That's probably the earliest time. If we can get through this margin posting, this margin quicker than expected, and the front end website launched quicker than expected, then it could probably get fit in, because development wise, it's not all that onerous. J Constant. What I don't get is this. There are only about 17 million Bitcoin. Let's say one Bitcoin is 10K, 17 million times 10K, around 170 billion, 50% BTC. Okay, well, I guess it's a fair question. You're looking at it from the wrong way, basically. So, yeah, there's about 17 million BTC, correct. Yes, BTC is in 10K right now. It's the 8. So whatever, let's just go with your calculation. So yeah, 170 billion, correct. 50% of 6%. Liquidity, Bitcoin is high, more Bitcoins. All right, tells me that the lag is gone, guys. You let me know if that's on your side. I'm gonna go ahead and shut down a few things here to see if that makes any difference. Let's see. Bear with me for a second. All right, so I shut down a few things. We'll see if that picks up for the lag. Let me get back to this question. Where was I here? Let me know what you guys missed, by the way, because I can always go back. but I was on. I have this BTC fix. So basically, let's say your calculations are correct. Nobody's making fake BTC. It's simply that you don't have to buy one BTC. You can buy 0.0000 out to 18 decimal places of one BTC. So that can be, that's a very small amount of money. And the reason why the price goes higher is because there's so much demand in the market that there's not enough Bitcoin to actually support the demand, which makes the price go higher. That's how every market works. Look, there's an infinite amount of tomatoes in the world, right? So if, let's say you went to a market down the street from your house, there was 10 tomatoes, but there was 400 people in line wanting to buy those 10 tomatoes. So obviously the owner of the store goes, well, tomatoes are usually €1 each. Well, now they're 100,000 euro each. But everybody in this line wants a tomato. Well, they can't afford a whole tomato now. So what do? They buy a piece of that tomato. And the guy sells a piece of that, 1/100th of that tomato for €1,000, right? Everybody comes in, they buy. That's how a market works. And that's how this market works, just like any other market. Nobody's making fake Bitcoin. You're looking at it from the wrong angle, basically. Sal, well, we already have use cases for XCM. So you're asking about XCM use case. There already are use cases. There's discounts in place. There's the fact that our fees are calculated in XCM, et cetera, et cetera. Every time we launch a new product, margin trading has been launched. We're working on the use case for XCM involved in margin trading, which will basically be a fee reduction in the margin fee. We're working on that now. It's not ready yet, but that'll be one use case tied to margin trading. There'll be additional use cases as we launch additional products. Every product will have at least one XCM use case, if not multiple use cases. API is coming, Bjorn. It's coming, it's coming, it's coming. I will have an update of that hopefully over this weekend. Can you ramp up ambassador program? From ramp it up, you mean mention it more? We can definitely try to mention it more. You guys can also, as ambassadors, by the way, mention it more. And that's really what the program is all about. Everybody kind of coming together to talk about this and get people excited about it. Airdrops. Many airdrop, and that's it. They never actually transact with the platform. They just come in for the freebie. Whether those type of promotions actually make sense. Hey, I know. I think it's back now, guys. Let's see. Hey, Krispy Kreme. You're it's called margin or new regulations. It's not new regulations. The question was immediately understood. Your lending margin. Done. Launch the product, we call it lending. These assets aren't financial instruments, but lending anything is regulated because lending, the act of lending, whether it's money, whether it's crypto, whether you're lending rocks, you're lending something, getting an interest back, and the person can actually go negative if they don't pay that interest because interest will compile. So the words interest, lending, etc., borrowing cannot be used unless you hold that regulation. So it's not we're not changing the way the platform functions or its functionality. We're simply changing the way it's presented. But that was always kind of on the cards. It just, in a white paper, if we said margin posting and margin taking and all these things, it would be more difficult for someone to understand. Roger asking, how much Chainlink do you hold? That me? Personally, I don't hold any Chainlink. But that's me. It has nothing to that's not me saying that there's something wrong with the company, by the way, guys. I just don't hold any. I hold a lot of XCM though. And other crypto assets, lots of majors, but no Link, at least not yet. New websites being worked on, guys. Exact time frame, but we're going to try to push it next weeks. Metro and whatnot. So it's on Metro. We're working on it, but again, limited staff. Battle. There's other things too that need to happen in tandem. So we need to make sure we don't pull off resources from something that's going to generate us direct revenue. Obviously, a website that can convert better is a revenue generator again, but we have to figure out how we get all these things done kind of in unison with a with a relatively small team. Was FX volume made by random people gambling? I thought 90% of FX volume was institution. Well, I'm specifically talking about the retail FX market. So FX, they say that it's a $6 trillion a day market. That's kind of untrue, because a lot that's taking into account all the volume from all FX transactions around the world. Meaning, if you have a debit card from Canada and you travel to Australia and make a purchase, at the end of the night, the bank is actually doing a batch transaction to convert that odd into Canadian dollars, or MasterCard's doing it, or somebody's doing it inside, let's say, the chain from the processor to the actual paying bank. That's an FX transaction, and it's occurred inside that 6 trillion. Retail FX is about 2 billion a day, and that is 95% retail money, 96%. Obviously, on the clearing side, people who clear are mostly institutions, but the people actually doing the trading, the speculative trading, almost 100% retail. Pete asking, what are the terms and conditions for listing new products? We actually have, so you can ask for it in Telegram. If no one else responds, I can post it to you. It's pretty expensive. That's one project. Approach a project. We've already done. If anything else from that project, we will ask business. We will ask. But we need to do due diligence on everybody involved. We need to do due diligence on the business itself. We need to do due diligence on the token. We need to understand how the token is classified, whether it's exchange token, whether it's some type of payment token, whether it's some type of utility, or whether it's a security. And once we go through all those steps and do all our due diligence, then we make a decision based on not only business metrics, but also just based on all of the information that's been collected through that entire process. Fergus. So he's saying Lynette Zhang on YouTube seems to really that markets will crash and we're en route for a depression, never mind recession. Well, whatever. I've heard people that there's 2 types of people, or 3 types of people in finance, right? There's professionals, 2 types of people, rather. Then there's subsets. There's finance professionals, and then there's nut jobs. And then underneath finance professionals, you have conservatives, people who are aggressive, moderates. Under nut jobs, you have extreme nut jobs. And under extreme nut jobs, you have the US dollar is going to fail tomorrow, and markets are going to crash, and everybody's going to be living in tiki huts. Those are kind of your that argument. So every time I run into somebody who say, the dollar, because now Iran and Russia are buying oil and, whatever, Indian rupees. So, dollar's done with. What they don't understand is that even electronically, the dollar underpins about 95% of all major global transactions. Trade finance being a big one, oil and gas being another one. Any commodity, when you're talking about cattle, wheat, whatever, all underpinned by USD. It doesn't even matter if it's between 2 countries that don't even USD. The transaction is recorded kind of like ledger. It's kind of like the whole world uses the US dollar state for all their transactions. That's pretty much what the it takes a substantial amount of time. The change that started back when Bretton Woods was knocked off, back when we had the gold standard 40 years ago, almost 50 years ago, and it's still nowhere. So this is a slow process. Everybody says that they're going to depression or depression. They're just going to have new highs, and everybody is going to be driving around cars. The truth is always somewhere in the middle. I see that recession's going to happen. The world economy acts on cycles, guys. You can't just go up. You can't just have a straight line up. This is how the line looks as you go up, right? None of that, unfortunately, is fake. This is how markets function. Markets will continue to function like this. Markets can be held artificially forever. Trust me. The deficit, all this other shit, all these other numbers on a screen, almost meaningless, guys. Almost meaningless. It all ties into the way that countries are governed now, which is based on fear, fear-based governance. When you can tell people that they're going to lose all their money, that instills a lot of fear, makes them change their mind, makes them act different. So you guys are just all part of the conspiracy, basically. Let's see. Are ETH too big to fail? Ruben. Hey, Ruben. No. Ether is not too big to fail. Neither is Bitcoin, for that matter. Throughout history, the general population has hated any entity that lends money for profit. Yeah, pretty much. It talks about it in the Bible for sure. Fergus, profit is a dirty word. Well, when it's not your profit. When somebody else is profiting big money, it's dirty. If you're doing it, it's fucking awesome, right? But when somebody else is doing it for not doing anything and just sitting on their whatever, then it becomes a dirty word. Right? Not trying to be edgy, but isn't that why there is a dislike for the Jewish prophet? Oh boy, here we go. I knew somebody's gonna come out with this angle. They were able to practice usury where other religions couldn't. Well, the Catholics practice usury all the time, my friend. Not just the Jews. Well, Jewish people get a bad rap, but I think they paid pretty dearly for that bad rap. Just saying. History hasn't been too kind to the Jews. And I'm not just talking about recent history, I'm talking about history way back to, 2,000-3,000 years ago. History's kind of been messed up to the peoples. I think they earned a little bit of a slightly more easier life, maybe. Having said that, I think most of those conspiracies are relatively not true. I've met a lot of people that own banks and have major interests that aren't Jewish. And every religion practices usury. Even religions like Sharia law that say you can't charge an interest, they still charge an interest. They just call it a fee. And the most ridiculous thing is the people that believe most that they need to be Sharia law compliant will still pay the fee. Like you're just changing, the header in the GUI. Instead of saying commission, it says fee, and they're fine with it, which is ridiculous. But anyway, you said that Jack K. You said the exchange uses base pricing from external info. Why is Chainlink base price only on order book price, which is like 100 times more than real price? Yeah. Actually, I had a discussion with Salvatore because I noticed that myself, obviously. And what happened was that when we launched margin trading, the feature that we use internally to actually apply a range was off. So we went ahead and turned it on. We went back and adjusted any orders. I don't think actually any orders actually came through, to be honest. So, but any orders that would have come through would have been adjusted. And outside of that, we adjusted the charts as well to show more legitimate pricing. So it was just an oversight on our side that when we launched margin, that specific piece of the ecosystem got reset. It's one of the reasons for one of the resets we did today when people were having trouble opening trades because we were resetting APIs. There's never a wrong time to do marketing, guys. Kish is mentioning that best time for marketing, CM, it's now that Binance is starting to get rid of US clients. I agree and disagree with that. There's never a bad time to do marketing. There's always a reason to do marketing. It's always the best time to do marketing, and it's always the worst time to do marketing, right? On the other side of the coin, pun intended. What the problem is that the more we talk about how we're accepting US individuals, there's nothing wrong with that. We're not breaking any rules. The more we talk about it, the more eyes we get on us, and the more somebody may try to find an issue, which is also something we generally don't want to do. We don't want to ruffle feathers, but we don't need to ruffle them. So not only that, but we're not going to pull money out of the sky. So we'll definitely make light of this. We are looking to make light of this. We will look to do a little bit of marketing. The ambassador program is there, guys. You guys too can go out and spread the word on how that we actually are compliant and follow rules, but can still take the majority of US traders. When someone trades on margin, does that increase the demand for XCM? Well, if they're buying XCM, for example, and they're able to buy 3 times more than the capital they have on hand, it would definitely increase demand. It can also increase sell pressure. But what it should do over time is neutralize. It just means higher volume. So the sell pressure and the buy pressure, why they might be higher number in terms of volume, percentagely speaking, meaning the buy and sell side of the book should remain the same over time. Initially, it can have a spike in one direction or the other, but over time, you're just going to see more volume, but generally the same ebb and flow between buy and sell side of the order book. Binance shutting down US clients and Kevin explained crypto were both totally choppy. Well, if we find out they were totally choppy, I guess we could just redo those. Kevin explains crypto and everything. Sorry about that, guys. I don't know. Maybe it's because of some rough weather here. Maybe our local ISP is doing some upgrades. No idea. Yeah, if only MasterCard did laggy AMAs or AMAs at all, I guess. David, ETM fixing wallets so we can have a market cap instead of just zero. Actually, been discussing that for the past 3 or 4 days. Internally, we now have a plan on how we're going to separate wallets, how we're going to segment them. And so that should be done shortly. Not soon, but shortly. All right, people saying it's lagging again. All right, guys, not much I can do. I can't really, unfortunately, make any changes on my end. Okay. Okay, so yeah, you're right. So it's public blockchain data for Chainlink, all right. So yeah, I don't think it's all that bullish directly. What it shows is that Google wants to be agnostic a bit. They have data sharing with these different entities. Overall, it's good. It just shows that they see how the market is maturing and they want to get involved. I don't think it's so bullish. I mean, it obviously was bullish for price. Price shut up a bit, that's for sure. I think though that generally that price will probably float back down a bit, mainly because it's just based on a news story. It's not necessarily based on demand for buying the asset. It's just about data sharing, as far as I can see. Thank you, Roger. Appreciate it. Thanks for stopping by. Thanks for the support, and hopefully we see you here next week too. Oh yeah, Reddit questions. Yeah, that's right. I'll have a check on those in a second. From Telegram, charting. What's the reasoning to change from last traded price to mid-spread price? Basically to keep a more orderly order book, to be quite honest, because when you have illiquid markets, you can have the last, especially let's say an XCM, for example, where there's no indicative rate coming from somewhere externally, or even when there is an indicative rate, we still have a range. But let's say for XCM, somebody places an order in the book and it gets filled at 18 cents, for example. But immediately when you scan the book, you can see that the liquidity available there is nothing, and that the next actual available prices that are inside the book are outside that range. So it's about keeping a more orderly book and to give people better expectations of where their order will be filled if they send through a market order, at least a piece of their order, and not just based on that last filled price. John K. Will CM ever list BSV? Why do you dislike Craig if he seems to agree with you a lot of things, like making Bitcoin compliant with regulators? I don't dislike the guy. I think he's a bit of an idiot because he does a lot of things that are just ridiculous. And him saying he's Satoshi, I think, is just hogwash. But why we don't list it? Well, we hadn't listed it before all this controversy nonsense. It's not that we can't list it now. It's just that, to be honest, when the volumes were spread along all these different exchanges, volumes were quite low. So there wasn't a big incentive for us to list it now. Now volumes are higher, that's for sure. Higher meaning because we would take probably a larger piece. So I could care less. Look, we don't necessarily, look, there's different types of due diligence that needs to be done when you talk about listing things. When you talk about something like BSV, for example, we're not talking about looking at the company or the shareholders or doing background checks on anything, because it's not really a business. It's just a blockchain with a coin. That's it. It's a fork. So there's not really that type of due diligence to be done. So it's really just about making sure, is it not a security? Well, no, it's clearly not a security. Okay, so we can list it. We could list it, right? One question comes in from liquidity. How will we be able to get liquidity on that? Especially if we get a lot of eyes on that immediately, will we be able to find a place that'll provide adequate liquidity for that asset? I could care less about Craig Wright. I don't care who's behind it. It makes no difference to me whatsoever. I think the fact that it was delisted from Kraken and Binance is ridiculous. And it's another reason why regulation should be in place. You can't just delist something because you don't like a guy. That's ridiculous. And the reason why we weren't planning on listing it before, mainly because, well, it kind of lost the battle when the fork happened. That's it. And because it lost the battle, we didn't plan on listing it. Now, I mentioned this last week or the week before, it makes more business sense to list it now because it could probably get a bigger chunk of volume. But then you have to think about what kind of reflection, what would our, let's say, supporters think about it, and would it give a negative reflection on us, which would actually cause volumes to drop everywhere else? So that's what you need to that's kind of the risk you need to mitigate in your mind before you make a decision like that. And I'm still kind of swirling that one around. I haven't asked. Let's see, new client. Haven't asked yet, but if ping me on Telegram, and I'll post that once I have the information. As far as new clients passing KYC. At 6 p.m. UK time for XCM on MT platform. It's 5 p.m. Talon, which I believe in the UK right now would be 3 p.m. UK time. It's in roughly an hour and 6 minutes. What are your thoughts, Harold asking, what are your thoughts on the Defend Crypto Fund from Kik fighting the SEC? Well, I think the SEC, they lost that SEC battle before it even started. And that fund is going to go nowhere. The SEC will crush them on this case, I think. It's pretty much open and shut. And I think they just came at it too late, too. I mean, charges have already been filed. So having said that, I think, look, I'm all for some people having an adequate defense. And I hate when I see a trial that happens where any evidence you may have access to and you look at it, you go, wow, this guy really had a chance of winning, or he should have won. Or clearly there were legal arguments that could have been made to help out this defendant. And they weren't made because the guy didn't have access to adequate counsel. So I'm all for funding, legal efforts. But here it's open and shut, guys. These guys clearly were advertising Kik as a security. They sold it knowingly to U.S. participants. They did nothing to mitigate that risk. They had no exemptions. They didn't do anything. So they broke the law. And no matter how good their defense is, the only real, let's say, good thing that could happen to them is that the sentence that they're given, this is a civil case right now, guys. They're getting sued. So there's no jail time, but depending on how the civil case rolls out, criminal charges might be right afterward. So I think they're probably looking at having to return every single penny that was invested by U.S. investors, maybe with interest, plus pay legal costs. That's going to be a significant amount of money. And when they can't pay, even before they can't pay, I would expect, depending again on how the civil trial ends, criminal prosecution to follow. And that will be for securities fraud, which is obviously from a monetary standpoint may not be as bad, but from a we're going to lock you up and throw away the key type situation is worse by far. Chris Summons, when IEO, this seems to bring lots of new crypto adopters to the platform, potentially adopting as well. I don't like to do anything just, by snapping my fingers. I want to make sure we do things right. I want to make sure it's actually different and actually we're bringing some benefit, not only to ourselves and you guys as participants, but also to the community at large. So with this idea we've been working on, it's not 100% complete. I'd say we're 90% of the way there. We have 2 projects that want to move ahead ASAP. That probably means July and August for those 2 projects, I think, at least how I'm looking at the calendar now. And so we're working to get that done. The announcement of how it's going to happen may happen as soon as the end of June, but probably till mid-July is when we'll start to release some information, mainly because we want to really fine-tune on how this thing works, because to be honest, the way IEOs are run today is very, very high risk for the exchange, and it's high risk for everyone involved, market makers, everybody, because there's so many, let's say, regulated pieces to how these things are being run that aren't being followed. And that regulatory risk is falling on the exchange every time they do an IEO, every single one, not on the issuer as well, but every issuer compiles to the risk on the exchange. About BSV, it's not an argument to list a token depending on the potential backlash of your customers. But it's not an argument to list a token. Look at how many people openly hate XRP, for instance, and still you list it anyway. I don't think the XRP haters will choose an exchange based on whether. You're right. I'm talking about you're still talking about. You're right and you're wrong, I would say, from my personal opinion. You're right. XRP, definitely there's people that don't like XRP. But there's a substantial amount of volume behind XRP, and we can make and we have substantial liquidity from liquidity providers. And it's very clear on what the use case of XRP is. I can argue that use case to the bank and to the regulator if I have to. It's very difficult to argue the use case of BSV, and it's even more difficult to find liquidity. So yes, I did say that you know, the backlash. That's something that I don't pay that much attention to, but it needs to be weighted when you're looking at something that has little liquidity, has really no, I don't know what the use case is for BSV actually. I have no idea. So it's harder, it's a much harder position to go to the bank with. Outside of going to the bank with it, there's gonna be a lot of people that don't like it. So it's kind of, you know, those two things together kind of compile. What's next for CoinMetro? What's next for CoinMetro in 2019? Well, we've already talked about, we're looking at this quote unquote margin lending, which is one thing we're working on now, which is really about posting and taking margins so that people can make passive income on their balances that sit with CoinMetro. We're also talking about launching this tokenized asset management. It'll be a bit different from the initial model, mainly because of some regulatory, not changes, but a little more regulatory oversight that's happened in the last few months. That's also something that's currently coming. It's on the horizon. And we have API as well, our fixed trading. So allow fixed trading via the fixed API directly into our exchange. Also taking the trade and the margin platform and kind of combining them so that we scale back from 3 platforms, or 4 right now actually. And it's about fine tuning intermediate as well, doing a rework on that platform. Aside from that, obviously, we're still going through a fundraising round. Once we get through that round, we'll be looking to jump on to start to acquire that investment firm license for MTF, CFD, and portfolio management. We also have a lot of different partnerships. We have these this IEO style platform that's kind of our ICO Express 2.0 that's coming in the next couple months. So lots of things going on, actually, not just in our roadmap, but also outside of it. Hey, Chris, do you have money for operations? How is money raising going? I think I answer this question every week, and my answer won't change. We've been fundraising, month to month since about December or January. We continue to fundraise month to month. And we're waiting on bigger tickets to close. Once bigger tickets close, it gives us a cushion, allows us to pull some effort off of fundraising and focus more on expanding our products and partnerships. So still, as of today, we're month to month fundraising. That means every month we're fundraising for the next month, basically. And we've been doing that now successfully since December. I would say, though, the market's starting to turn around, obviously. So as you come out of that crypto winter, people are starting to generally look at exchanges and crypto companies in a different light than how they looked at them, let's say 3-4 months ago. Do you know Minibot from Italian government? And if yes, what do you think about it? No, can't say I did. Like some nickname for a politician, or do they actually have a miniature robot hanging around? Let's see. I'm going to do a quick, ask my friend Google here. Post-government mini treasury bills similar to IAUs would help Italy deal with its debt. Okay. Well, bad idea. Essentially, it's a bad idea. And to be honest, the EU would never allow it. So unless Italy wants to leave the EU to do this, which would end up insufficiently destroying their economy more than it already is destroyed, I would say it's not going to happen. How much your money you want? Well, I've already invested. To get the ICO off the ground, I personally put, I think, about $250,000 in myself. I'm willing to put everything I have into CoinMetro over the course of a certain amount of time to keep the company afloat. So, BitMEX CEO is looking to support crypto projects. Drop him a message. Maybe he can invest in CM. Yeah, I guess I could. Of course, everybody else and their grandmother's probably submitting him messages, and I'm not sure. Obviously, everybody wants to diversify. A lot of even exchanges and peer-to-peer exchanges invest in other crypto projects. But yeah, there's always an option. I've talked to a few of these guys, so I guess it's worth a shot. But I'm not sure we would necessarily be something he'd be all that interested in. But I could be wrong. Yeah, Reddit questions. We're already over the hour, guys, by the way. So Reddit questions usually come when no one else is at, but we've had a lot of questions roll in on YouTube today. So regarding the margin trading and XCM pair from Maxence Legros, launching in an hour, don't you think XCM whale could crash the price like we have seen with BTC? Well, the XCM whale could crash the price outside of margin. It's only 3-to-1 margin, guys, only 3-to-1 leverage. So if a whale came in, he could do the same thing. You know, adding an additional leverage, again, initially can cause spikes one direction or the other. It can cause the price to go immediately higher by a decent margin or immediately lower by a decent margin, depending on how the trade flow initially starts on the leverage side. But eventually, once more people use the leverage option, the amount of buys and sells in terms of percentage doesn't change. So, yeah, I'm not too concerned. It can happen on the regular platform almost as easily as it can happen on the margin. We're not offering 100-to-1 or 500-to-1 or anything like that, where someone could substantially come in and take a huge position and try to force the order book in one direction. We're talking about 3x. And we're limiting it initially, by the way, to 1,000 euro in collateral. So that means even if you could put collateral up in 4 or 5 assets, maybe have 5,000 euro, that means 15,000 euro. We're not talking about huge sums. Again, it's not much different from your standard order platform. You know, plus you're talking about a cushion to avoid negative balances. So that 3-to-1 leverage is actually limited to less than 3-to-1 based on that cushion that's required, the available margin that's required to maintain that position over time. David, do you do good when you were a trader yourself in the FX market? When I started, no. Like every other trader, my first foray into trading, I lost many times over. And then I kind of became self-taught, read a lot of books, started to hone in on just naked charts and analyzing volume and some just basic, support and resistance, basically knowing how to read a chart and seeing where accumulation, consolidation, support, resistance, all these things lie, and really understanding risk. Once you understand risk, it doesn't even matter if you pick bad entries and exits, you can still make money. So at the end of the day, yes, I became profitable, but for the first year or two in the market, I struggled. And then as I progressed and as I really started to understand more about how to mitigate my risk and manage my risk, is when I started to actually turn a profit. Where do you buy your t-shirts? Well, a t-shirt's just any old t-shirt. I buy them here in Estonia, and then print company prints the old logo on them. So yeah, it's just a basic t-shirt. I don't know the brand actually, but it's kind of, you know, Hanes or American Apparel, any of these like basic t-shirts. Do you still trade FX? I haven't actively traded FX in years, actually, because even as an FX broker owning FX Pig, I just didn't have time. If you don't have time to do the right analysis, you can't really be a successful trader. There's no such thing as a guy that checks the chart 10 minutes a day and then walks away. You know, for that really doesn't happen. So you need to be in tune. You need to understand. You need time. You need to be in a stressless environment, etc. I stressful situations and lose everything, even though they are extremely gifted in trading. So it's all about mindset as well. So I haven't actually. I trade often. I trade every now and again when I see something that just is too easy. It's just too easy of a setup. But actively haven't traded in years, so probably 4 or 5 years at this point. Any recommended reading to understand risk better? Specifically to risk, I'll have to think about that one. What I can tell you is it's all about creating a plan. I'm not going to risk more than 1% of my account balance on any trade. And then calculating your stop losses, your take profits, etc., your entries, your exits around that, and never falter from it. I don't care if, you know, this is your 45th loss in a row and you're, you know, about to hang yourself from your ceiling fan. You take that 45th loss and you open that 46th trade. That's it. That's how trading works. And most people can't do that. And that's why most people fail. It's not because trading is so difficult. Nothing in this world is difficult. Being a neurosurgeon, and no disrespect to all you neurosurgeons out there who happen to be watching this Friday AMA, is not difficult. Being a rocket scientist, not difficult, my friend. If you can read a book If you're able to understand things and you go to and you learn it, you can do it. That's for sure. Anybody can do it. Just about anybody can do it. But most people don't do it. Why? Because they give up. People give up really, really easy. They have one failure, they give up. They say they want to own a business, they open a business, they get no clients for the first 3 months. They go, oh, Christ, what am I going to do? They give up, they get a job again, and they never try again because you know what? They failed and it's impossible. And only really lucky people have businesses that make money or whatever nonsense. Not true. Just, you need to know how to fail. And it's the same thing in trading. A failure, as long as it follows your rule set, is not a failure. It's a win. If you lose 1%, 27 times in a row, but you stick to that 1%, and on that 28th time, you know what happens? You make 75% on that trade. As the trade moves, you basically are adding to it like you're supposed to in trade. You don't add to losing positions, you only add to winning positions. And you scale out of that position with a trailing stop, you make 75%, and guess what? Who cares about 27 losses? That's it. It's very simple, but human nature makes it very difficult. Chris, how are you going to use the marketing budget to market? Standard and out-of-the-box marketing. So you're talking about standard marketing. You're talking about different aspects of social media. You're talking about some maybe influencer things. You're talking about different targeted market in different regions. That could be marketing when it comes to billboards. It could be things like our airport gate, et cetera. And you're talking about news media, outreach to news media, coverage, television coverage, streaming media, all that good stuff. Daiquiri phrase. Sorry if someone has already asked this, but what do you think is the good price for XCM? I think right now is a great price. I think every price is a great price. I think the fact that XCM right now has some utility, but that utility is going to grow over time. And all those utilities are directly tied to usage of the platform. As more people use the platform, there you go. More demand is instilled for the token because it's required because of all this different utility. So what do I think it should be worth? I think the value right now is, let's see where it is right now, actually, because I haven't checked it. I'm sitting more or less where I left it. I think the value right now is still a bit low for even the limited utility it has right now, but it's generally in a range that I think makes a bit of sense. But I think the propensity for it to go to higher prices is there. It's definitely there. And as we add utility, there's only one direction it can go. And if you take a look at really how the tokenomics function, you'll see that and understand that there is a direct correlation to usage and price. Any YouTube videos playlist planned to educate new users on how to use MT platform? Yep, we have something planned. We have a walkthrough planned. Once we get feedback on where the real bottlenecks are for people, there will be a walkthrough. Like, click here, this is what this means, this is what that means, like a guide, a little tour. And then depending on how that's received, we'll do some type of video. And I'm probably going to be the one that voices it, I imagine. You never add to a losing position. I added a huge chunk of XCM position. Well, that's not adding to a position. That's cost averaging. That's different. What I'm saying is that as price is going lower, there are people that constantly add to that position, not necessarily to cost average, and they don't generally look at what they're risking, right? So they're risking 1% per trade and they follow that, but they add 75 different positions. So now they're over leveraged on the trade and they're not really paying attention. And that's not, cost averaging is one thing. Cost averaging is looking at when you see that price hits support and adding to that position, right? That open exposure, right? To make sure that your cost average so that a retracement puts you in profitability. That's different. Sounds the same, but it's very different. Are you going to open up the exchange without having to log every time? Yes, we are, David. It's coming with the new website. You'll be able to see the dashboard as well as the different platforms without needing to log in. It's coming. It's been planned for a while. It's just obviously we need to prioritize, but it's coming. Margin lending. Can my deposit have a loss and how much can I earn? Carl, so no. We will have negative balance protection, which basically means your balance can never be affected, never go into negative. Well, the trader cannot go into negative territory, which means that the underlying margin cannot be affected. How much can you earn? It depends on the market. So there will basically be a formula that devises what the daily interest rate is. Right now on margin, we charge 30% annual interest, but we charge it by the second, which means if you hold a position for 25 seconds, you only pay for 25 seconds of that interest. It's roughly 2.5% a month, roughly 0.8% a day, 0.08% a day. So do your calculations, divide that by 24 hours and then 60 minutes and then 60 seconds. You'll get what it costs per second. The rate that will be applied to the actual book where people will be able to post margin will be based around that rate, but it will fluctuate with usage. The more people that ask for margin, the higher that rate will go. The less people that ask, the lower it will go, and it will fluctuate. So it'll be based on market demand, but suffice it to say, you'll be able to earn a decent amount of interest by putting up margin for other traders. Axel, which impact would you expect the Facebook Lira announcement and a later issuance may have on the perception of crypto assets and in the short term on Bitcoin? Well, the announcement, I think, has little to no effect because for the most part, this is a retail market and retail traders don't know how to digest fundamentals. They can digest hype, like, this is awesome for this token and this token's going to go to the moon. They know what that means. But when you talk about real macroeconomic sentiment or a statement that doesn't generally say anything specific and just talks about how a company may be coming into this market, I think has little to no effect on the market. The actual launch really depends on what type of transferability and interpolarability that token has with every other token or coin on the market. If Facebook allows that token to be easily converted into, let's say, Bitcoin, Litecoin, Ethereum, etc., and it's accepted on different exchanges around the world, it only has a positive effect because what will happen is it's going to probably underpin that to the way you pay for advertising. You'll probably get discounts on advertising. You'll probably be able to use Instagram to buy things by clicking on it, using that token, getting discounts. You'll probably be able to send money to your friends and family on WhatsApp remittance over the WhatsApp app for nearly no charge. And as long as people can freely interchange that, I think most of that money flows back into where the liquidity is, Bitcoin, Ethereum. So I think it actually has a positive effect. If they lock the market down and make people exchange it only with Facebook, let's say, like you can send money to your grandmother in India via WhatsApp, she then converts it to Indian rupees through Facebook or a Facebook partner and then collects it at a pharmacy. That's going to have a very bold, very, very, very hard and probably negative impact on many different payment tokens, XRP, Bitcoin, etc. So we'll have to see. Like I said, I mentioned this in Blocks Live today. They haven't really discussed exactly what they're looking to do with this token. When they do, we'll get a better idea how it'll affect the market. Margin lending sounds too good to be true, and now they say about things that sound too good to be true. No risk for the lender, no disadvantages, not to stake idle funds. What's the catch? Well, I think you're missing most of the time. Like for instance, when someone says there's no fees, people go, this is ridiculous. No way somebody can operate with no fees. Well, there's always fees. They just don't charge you the fee here. You could charge the fee over here. So in margin, think about it this way. Right now, when we offer margin, we have to put up the funds. We have to cover all those additional margin funds, which means we have to lock up our own capital. Now we make an interest to lock up the capital. So, okay, but we still need, so that means we have a limited amount of availability of how much margin, how much credit, how much margin we can provide. If we can allow our clients to provide their funds for margin, it allows us to sell that margin capability to more traders, increase the leverage, increase the volumes, make not only the commissions on the volume, but make a percentage of the fees earned from actually posting the margin by our clients. So the clients put up the money, we still make more revenue, we induce higher volumes, we are able to offer higher leverage. Now, in the EU, under ESMA, you have to provide negative balance protection. Now, you can argue that Bitcoin, Litecoin, et cetera, are not financial instruments, thus they don't fall under this ESMA ruling. And you generally be correct. However, they eventually probably will. And second to that, immediately when someone goes into negative territory, it automatically means you provided them a loan or credit. No one can go into negative territory unless they were offered a loan or credit. It is impossible. So the minute someone goes into negative territory and it's reported, the regulator will assume you've lent them money. That's a regulated product. And guess what? Now you're on the hook. So whether we want to provide it or not, we absolutely have to provide negative balance protection. Now, there's technical ways that we stop this from happening. There's buffers in place. You need to have a certain amount of margin all the time. If you don't have, once you get to a certain percentage of that available margin compared to your use margin, we're going to start to stop you out. Again, in really volatile markets, there can be issues. We can limit that as well by providing thresholds, limit order only, by providing maximum exposure that on certain assets, et cetera. So there are ways to mitigate this, but again, we're almost forced into doing it. You look at what happened with Poloniex, that was just stupid. They provided high margin on a very illiquid asset and had no risk mitigating factors in play. They put no features in there that mitigated the risk that someone could distort the book and basically cause negative balances. So it's not too good to be true. And when you really look at it, it provides X amount more volume for us and provides us an additional way to make money as a percentage of the fees charged by our clients to post that actually earn money from posting the margin. And it gives us an additional case to sell to clients where they can make passive income. So there's a lot of pluses there. And to be honest, when you add all those pluses together, on the off chance that there is some negative exposure at some point, which isn't going to happen every day or every month or et cetera, as long as those other pluses are funneling in revenue, you can cover those let's say, potential minuses. Do you unofficially endorse your community members calling out CMC on social media? I think CMC already knows, guys. I think they just, well, maybe don't care that much. They did reach out to us. Apparently, what we submitted to them wasn't considered to be some type of, I don't know, a token listing. They asked us for, or the process had changed since we initially submitted it, because they never even realized we initially submitted it. The process changed, and then they never even looked at it. Then when they looked at it, they said it was missing information, but we had sent all the information they asked for. Anyway, it was a bit of a cluster, you know what. So we actually got in touch with somebody else at CMC who's been more active than the last individual. And now we're going to restructure the wallet structure of XCM so that they can see better the circulating supply. And I think that'll pull us over the line. So I don't have a problem with you guys asking, but I think it's not going to change anything. So, I can't stop you guys from asking, but I at least would ask, if you ask, be cordial about it. And let's see if we get a response. But, I don't think it's needed, to be quite honest. I know Reddit questions, but the Reddit questions are there only when there's no questions coming in here. We're already 22 minutes past the top of the hour. So I'm going to take a few more questions here. Reddit questions will have to wait till next week. Will just XCM be used for margin trading? No. You'll be able to put, you can already put collateral in other assets, but you'll eventually be able to put collateral on XCM as well. As to Libra, the remittance markets is large for both Mexico and certain Asian markets such as India and the Philippines. CM, for a variety of good reasons, seems to be in a decent position versus the Mexican remittance market. Thus, Facebook's transfers may be of competitive interest. Yeah, obviously they have a platform they already built out, which has billions of users, billions of accounts, probably, I would say at least hundreds of millions of users, if not over 1 billion users. Yes, hard to compete with that specific market because they already built up the user base. The way you can compete is you can offer, if they open up the ability, look, anybody can create widgets for a lot of these platforms, right? So there's probably a way to do some type of, cross compatibility so that our own token could be used in some of those remittances. Having said that, I still don't even know if that's what they're going to do. That's my assumption. That's what I would do. That doesn't mean that's what they're going to do. We need to understand what they're going to do before we can make, assumptions on how we can possibly play along or go along for the ride. Okay, guys, we're 23 minutes into this. I didn't get to the Reddit questions. My apologies. We had a bit of lag. Sorry about that. Not much I can do. I'll try to pinpoint the reason and make sure it doesn't happen again. Thank you guys for being here. It was a great chat. We actually had a good amount of feedback this time. That's great. I think every week we get a little better. Maybe I don't get better. Maybe I get worse. I don't know. But you guys definitely get better. Yeah, margin trading is coming on XCM in about half an hour or so. So we'll be on the lookout for that. Hold on, Chris Summer is saying something. You control a lot of XCM. You could potentially influence the price direction. What is the guarantee that you will not do that? 3x is still good money if you push the price from 8 to 4 and short. Yes, we control a lot of XCM. But if we short, if we sell it, we no longer have it, which means we then need to induce euro to buy back at a lower price. But if we're selling on the way down, we have less euro. And when we buy it back, we're going to buy back more or less the same quantity because we don't have extra euro to pump into the market. So even if we wanted to, that scenario is almost impossible for us right now. Why would we not do that? Well, it's illegal. That's why. We are a compliant exchange, and I don't say that just to say it. We would not do that because that is front running and spoofing to a certain extent, and it is illegal. And we don't condone things like that. And if we were in this for let's say quick profits, there's a million things we'd be doing. We'd be listing any single token we could. We'd be putting every shitcoin we possibly could. We'd have 100 to 300, 500 to 1 margin. We'd be doing everything that our competitors are doing because it would make us a lot of money. But it's also either immoral, illegal, or simply just too high risk for an actual regulated financial entity. So. Maybe that doesn't completely answer your question, but it doesn't behoove us right now to get rid of those XCM. It behooves us to create a market that adds demand to the token. So over time, the tokens we hold are worth much more. So if and when we do decide to liquidate any amount of those tokens, they can benefit the company a whole lot more than they would benefit right now. Don't worry, Roger. We're not dumping on XCM. It's extreme. It's not in our interest to make the price go lower because we do not have euro reserves to buy back. So if we make the price go lower, we just lose money. That's it. Okay, Chris, and everybody else, thank you very much. Thanks for the questions. I'm signing off now, guys. We have a little party in the office. Maybe we'll get some pictures of this thing on Instagram or something. It's going to happen a little later today on the terrace. Yeah, it's actually an employee of ours' birthday, so happy birthday, Regina, if she's listening. But aside from that, we had margin trading launched and everything like that, so we're going to have a little party for the guys, and yeah, that's it. I got to go set up some DJ equipment, so there you go. Anyway, nice to see you guys here. Have a great weekend. As always, don't look at price. Buy some XCM, see some friends and family, take some downtime, get ready for the week ahead. And ping me in Telegram if you have some questions you want me to answer. If you have a Reddit question I didn't answer, ping it in Telegram. I'll get to it later tonight or tomorrow. And see you guys soon, especially next week on the AMA and definitely on Telegram. Cheers, guys.